Asian stock markets steadied on Wednesday after an early sell-off, as renewed optimism over artificial intelligence helped investors look past concerns about Middle East tensions and stronger-than-expected U.S. inflation. From Seoul and Tokyo to Wall Street, oil and currency markets, investors are balancing geopolitical risks with confidence that AI-driven growth will continue to support global equities. Here is your full global markets roundup. Asian equities regained ground after a weak start to trading. MSCI's broadest index of Asia-Pacific shares outside Japan rose 0.3% after recovering from an earlier decline of as much as 1%. Japan's Nikkei 225 gained 0.8%, while S&P 500 E-mini futures added 0.2%. South Korean shares were especially volatile. The market initially fell sharply after Samsung Electronics failed to reach a wage agreement with its union, raising the possibility of a strike involving more than 50,000 workers. Samsung shares dropped as much as 6.1% before reversing higher after Prime Minister Kim Min-suk said the government would help mediate talks. The stock ended up 1.8%, while the broader market closed 2.6% higher at a record level. Analysts at Nomura said strong AI-related exports from South Korea and other parts of Asia are helping cushion the impact of elevated energy prices. Investors are also watching a highly anticipated meeting between U.S. President Donald Trump and Chinese President Xi Jinping later this week. Trump said he does not expect to need China's help to end the war with Iran, but markets are hoping the summit will at least preserve the current trade truce.
Iran,
I don't
do you
think
think
he
he can
does,
help
no.
in any way?
No, I don't think we need any help with Iran. We'll win it one way or the other. We'll win it peacefully or otherwise. Their Navy's gone, their Air Force is gone, every single element of their war machine is gone. They've killed a lot of people. They've killed 42,000 people at least over the last month and a half. We win. No matter how you cut it.
Morgan Stanley said an extension of that détente could support further gains in Chinese and global equities. The bank also reiterated that artificial intelligence and related capital spending remain key drivers for markets. Some investors remain cautious, noting that previous high-level meetings have done little to fundamentally reset U.S.-China relations. Brent crude fell 1.4% to $106.32 a barrel, snapping a three-day rally. However, oil has remained above $100 a barrel since late February amid supply concerns linked to the Iran conflict and disruption in the Strait of Hormuz. The rise in energy prices has added to inflation pressures around the world and complicated the outlook for central banks. U.S. stocks declined after data showed consumer prices rose by the most in 3 years in April. The S&P 500 fell 0.2%, while the Nasdaq Composite lost 0.7%. Markets have now largely ruled out any Federal Reserve rate cuts this year. According to CME's FedWatch tool, the probability of a quarter-point rate increase by December has risen to more than 35%. The yield on the U.S. 10-year Treasury note stood at 4.459% after reaching its highest level since July. The dollar traded at 157.73 yen as markets remained alert for possible intervention by Japanese authorities to support the currency. Meanwhile, Japanese government bonds sold off sharply. The 10-year yield rose to 2.6%, its highest level since 1997, while the 2-year yield reached 1.4%, a level last seen in 1995. The move reflects expectations that the Bank of Japan may continue raising interest rates as higher oil prices feed into inflation. MSCI said it will remove 6 companies from its Indonesia index at the end of May, citing concerns over market transparency and concentrated ownership. The affected shares fell sharply. In Europe, futures pointed to a stronger start, with pan-European contracts up 0.9%, Germany's DAX futures rising 0.8%, and FTSE futures gaining 0.6%. Gold slipped 0.1% to $4,708.24 an ounce. Bitcoin rose 0.5% to $81,110, while Ether gained 0.8% to $2,301.66. India's economic outlook is facing renewed strain as elevated oil prices increase import costs, pressure the rupee, and discourage foreign investment. Authorities have introduced measures to protect Asia's third-largest economy from the impact of prolonged disruptions in global energy markets. That was your Global Markets Roundup. Asian stocks recovered as AI optimism outweighed concerns over inflation and geopolitical tensions, while investors kept a close eye on oil prices, central bank expectations, and key meetings between world leaders.